It's Fed Week. That's our topic for this morning's Backstage Pass. Good morning, I'm James Lopez, president at HomeFi Corporation. Hope you had a great weekend. This week is Fed Week. The Fed starts their two-day meeting, the FOMC meeting, on Tuesday. They're going to wrap up on Wednesday. And, the big question is, what is the Fed going to do? Now, so far this morning, mortgage bonds are down about 75 basis points. The 10-year yield is up 16 basis points. Stocks are down significantly so far this morning as well. And what it really seems like is it seems like there's some panic that's starting to set in by investors based off of the hot inflation reading that we saw in the CPI on Friday. So we're still trading off of that CPI data, and really there's a lot of red everywhere across all of the markets. The question is, what is the Fed going to do? There's some analysts that are out there that are in the media that are calling for the Fed to raise the interest rates by 75 basis points. Some are even saying shock the system and raise the interest rate by 100 basis points. So what is the Fed going to do? Right now, it's already expected that there's going to be a 50 basis point rate hike. That's kind of expected. But again, a lot of people in the media are really feeling like the Fed is a little bit behind the curve right now on inflation, and a shock to the system is going to be what's needed to really help curb inflation, slow it down. And then, the bond markets and the stock market's going to react to that information. Whatever the Fed decides to do, the markets are going to react to that for good or bad. That's what's going to happen. So this week, the Fed is, all eyes are going to be on the Fed. What are they going to do? How are they going to react to, Friday's data? And how are they going to react and move? And what moves are they going to make going forward? Maybe instead of a 100 basis point rate hike this meeting, maybe they do 50 basis points, but start to lay the foundation for a more aggressive rate hike at their later meetings. So we'll wait and see what they do, and we'll bring that news to you as it comes. Now, like we said, there's a lot of red everywhere. Stock markets are down, mortgage bonds are down, the 10-year yield is up. But one bright spot in all of this is the housing market. The housing market is incredibly strong in the United States. Now look, 38% of homes owned in the United States are owned free and clear. That's a huge number. And now, obviously, refinances are down. That's because over half of the mortgages in the United States are under 4%, have an interest rate under 4%. Over half. Now, last week, at the end of the week, June 9th, the interest rate, the 30-year fixed interest rate was 5.32%. It's obviously higher than that now. This morning, interest rates opened up much higher because of what's going on in the bond market. But look, half of homeowners with a mortgage, their interest rate's under 4%. The housing market's strong. And here's another thing. There's an interesting survey that Bankrate did. They did a survey and they found that millennials and Gen Z, 74% of millennials and Generation Z believe that home ownership is the pinnacle of the American dream. That's the thing that they want to achieve. However, 2/3 of them still, the reason why they're not buying right now, or what's keeping them from buying, is affordability. Now, we talk about this a lot. Home values are high, interest rates are high, the inventory is low, affordability can be an issue. But look, whenever you're talking with your customers, you always want to make sure that you show them options. Here's your options. You can buy right now, or you can rent right now. Rent affordability on rent is high or not very good as well, right? So rents are up. So affordability is an issue with rent, and so is inventory. So we've got a great tool that we can give you that shows a buy versus rent comparison, breaks it down year over year for 1 year to 5 years to 7 years, and what the cost of home ownership is versus the cost of renting. We break this down county by county, and we can give you a sheet that shows the side-by-side comparison for all 50 counties, or not all 50 counties, all the counties in all 50 states, okay? So, if you want to see that, if you want to use that, it's a great tool to help with your customers, with your buyers, or if you're a real estate agent, or if you're in the mortgage industry, help with your customers and talk them through. Say, listen, rent has its own affordability issues. Here's a side-by-side comparison, and give those customers some options. Now, listen, this week is a busy week. We already said that the Fed's got their meetings, but there are other things that are coming out. NAHB, the National Association of Home Builders, they're releasing some data this week, including starts. That's going to be interesting to see. We're also curious to see what completions look like because of the inventory issue that we're having. So that's some data that's coming out this week. Also, again, the big thing is the 2-day FOMC meeting from the Fed starts on Tuesday, ends on Wednesday. They'll release their statement, and then there'll be a press conference with the Fed Chairman Jerome Powell. All eyes are going to be on that this week. So as that news comes, we'll bring it to you. That's all the news that we have for today, though. Now remember, stay positive. I hope you have a great day, and we will see you tomorrow.